Testing some music. Test. All right. Things are looking good. This is just getting up live a little bit early to see if this thing's still working. I want to test the sound levels on this screen. Got some royalty-free music going on. You'll have to let me know if it's too loud. I guess I'll rewatch the stream later to see, but good evening, everyone. Let me know how the sound background music volume is, if it's too loud or not. Cool. Okay, so just getting a little stuff set up here. No rush here. Gonna get my 4X factory started as well. Then we're gonna see what we got here. Okay, great. So looks like vocals are looking good. Everyone can hear me okay here. Test, volume local. Good. Awesome. All right. All right, let's take a look at, we're gonna get started here in a second here. Just need to make sure all my stuff is here while people get in. And gotta close some stuff here real quick. Let's close some of these. Okay, great. Cool. Okay, so all right, it's time to go live. So good evening, everyone. If you're watching this next day, next week, that's okay. Wanted to hop in. As you know, my work has gotten super crazy lately, and I haven't been able to really trade much live. I have been trading during Asia. Sometimes if I get a break in between work, I'll try to hit a trade or so, but outside of that, haven't really had much time to trade. So I'm trying to go back and find that post because I want to do an update on where we're at right now with some of the accounts and how things are going there. I think the last update was a few weeks ago. Let's see. Okay, great. So we're gonna do a couple things tonight. We're gonna do weekly outlook. We're gonna do what I see this week, where I think we're gonna draw. We nailed the draw right on the hammer, right on the head of the nail last week, where we thought it was gonna consolidate, and we ended up exactly where we started. So we're gonna take a look at the charts here. We're gonna get prepped for the week, and then we're gonna go into how we're doing. So without further ado, let's head over to the charts. Okay, so this week is kind of crazy, as you can see. We've got a lot of FOMC speakers on Monday, a lot of FOMC speakers on Tuesday, and also a lot of FOMC members on Wednesday. So, and the 10-year bond auction as well. Sometimes that doesn't really do much there, but really the FOMC minutes is going to be the bigger impact item there on Wednesday. So obviously Thursday and Friday are the big CPI and core PPI numbers. So we are going to be pretty much just waiting for Thursday and Friday this week. I think that if you're a trader, you can definitely find some plays that are going to set up on Monday, Tuesday, but I anticipate that it's not going to be, it's going to probably be a little bit more higher resistance because the algos are going to pick up real quick on what the FOMC members say. As we get further into election year, we know we got elections about 1 month away for the United States, so that's going to play a big factor into this year. So Overall, I'm still bullish on the year. Yes, we had some pretty nice sell-offs here, but overall, I'm still fairly bullish on the year. So I'm going to maintain that until I see something different to that, right? So also, let me know if the music's too loud. You can kind of see like a little bit of movement there. So want to make sure that I'm testing out some background music just to see how things are going. So let's go over to the charts and see what we got for the week, though. All right. So this week, let's go to the weekly. So we're going to take a look at the weekly chart first. This is the weekly chart. This is these are the current. This is the current weekly dealing range, and I've split that into quadrants. We can see we're in this upper quadrant here, so we are in a premium, and we've rejected straight off of that SIBI, leaving a little bit up here. So where do I think the draw is going to be? Well, what I really need to see this week, okay? So I'm going to get rid of this dealing range here real quick. Actually, I'm going to repurpose it. So I'm going to take a look at this wick here. And I want to see where the midpoint of this wick is, because that's going to be a draw on liquidity for me this week. So you can kind of see roughly around 203.79. We can place a weekly level here that we can aim for this week. And I'm going to make that into a dashed line. And I'll put that right around here, 203.79. Let's say minus week two, wick consequent encouragement, buy side liquidity. So I'm treating this as buy side liquidity, okay? So I want this there. I want this as a potential target, because if we don't reach this, it's going to be kind of key. If we don't reach this and we take this area of liquidity and then immediately sell off from there, that's going to be telling to me that we are going to be in for a bearish week. So that's something I'm looking towards. Now, keep in mind that we do have outstanding liquidity waiting here on the weekly. So this portion right here is going to be still definitely something that we could reach for. It's outstanding liquidity there. It's certainly something that we can consider. And I think that we can reach for that. But before we reach for that, we need to find our way up to this quadrant of the wick, and we need to find a close above that on the weekly, in my mind. If we keep on seeing closes beneath this, like candle body closes beneath this and wicks going up to right around there and then rejecting, that's going to be a telltale sign that the market does not want to go much higher than the consequent encroachment of the weekly SIBI, which we traded up into. So we traded that up into that once, twice, sold off, came down into this buy side imbalance, completely rebalanced that one pretty much, and are now on a new week. So I think that we're gonna likely end up reaching up towards that wick. Now, keep in mind there's also another wick here, right? We have to take this into account as well. So we'll put from the bottom of that candle here down to the low of that candle's wick. So now, if we're bullish, we also do not want to see price head this far down. Okay? So we have this instead. This is around 20,008. So let's mark that. 20,008 dot let's see, 15. So let's say 25. Let's just use whole number. Big whole number there, right? So what we can do is we can take those two values and treat them like they are potential areas to draw to. like within this realm is feasible for both of them to draw to it. And also look what we have here. We have a volume imbalance down here. We have a wick consequent encroachment here. And I wish I didn't get rid of that. Damn. Okay, that's okay. We just create another one. So what's really interesting about this one as well is there's a midpoint right here too. So between these two, I can do this. Might be easier to see. This is the higher one up here, and this is the lower one here. So between these two, I can totally see this as a area which we might consider. Oh, we don't really have something for this, do we? This is a concept I think that ICT had brought up called the gray pool. So looking at the consequent encroachments of both of those, sorry, that's a little too much. So looking at the consequent encroachments of both of those, both of those tails, and I actually should label this as a tail, not wick. Consequent encroachment, this is more of a sell side liquidity. So between this area, I'll be watching if price comes all the way down here as well. Now, keep in mind there is a volume imbalance right here, but because that is a weekly volume imbalance, I think that potentially if it trades below there, it could trade down into, and doesn't have to, but could trade down into these 50% marks on those weekly candles. So instantly those are those are the two things that my eyes are drawn to. I do recognize there's this open stacking of volume imbalances which could draw us down further as well. So I'm keeping that in mind from a weekly perspective, that there are pockets of liquidity open, and if we do not reach down that far, then maybe we just reach down to the volume imbalance and then bounce back up. So far we've begun the week trading upwards, and whenever we start the week trading upwards, many times the week can close down like this. So overall I'm still bullish though, so I expect the week to trade up, down, and then all the way back up again, but we'll see how this goes, right? Okay, so that's on the weekly, the time spent on the weekly chart. We have not filled in the rest of this, so you can treat that as a area fair value gap. I think from here to here, it's kind of like what's outstanding essentially is what's there. So relative equal highs on the weekly, so everything could be reached for before the end of this year. So so those are my core weekly liquidity areas. Of course, you know, the previous week's high right here is going to be a factor, and the previous week's low down here, if we can make it through this, would be the next area of liquidity to tackle. Yes, we do have a higher liquidity here, being the previous 2 weeks high and the third week's high, but you know, we're going to take a look at the daily to see what's going on there. Okay, so this is a daily chart, right? Same thing. You can see the same weekly dotted lines up here. And you can see that the daily chart gives you a little bit more of a coloring inside the box here. So this daily chart, we see that the midpoint of that daily wick happens to be below the midpoint of this, the weekly wick midpoint is roughly at the lower end of these wicks here. So if we take a look here, we've definitely got some rejection block. We could trade all the way up there and reject, and then take that out later this month or this week. Or we might trade lower into, we bounced off the low of the current new week opening gap already. So we traded above last week's high, took that liquidity out, and then traded down. So as expected, so far, we have not created a lower low, but we have created relative equal lows. So I'm going to be watching to see if we take those out on the 15-minute chart. So outside of that, on the daily chart, we see a lot of this area here. Looks like a rejection block. Now, notice what else is there, right? Remember that gray pool I pointed out on the weekly chart? that right here, this whole area, to me, as well as this weekly volume imbalance, are going to be very important as potential draws, because if we're bullish, we don't want to see price go down below these areas. We don't want to see price go down below the midpoint of these areas. This would be the lowest I would consider price to come down before continuing forward, right? So we do see a daily implied fair value gap here, buy side imbalance. So what we're seeing here is we see this buy side imbalance here. We see that we potentially could head down towards that. It's an implied one because this day has not finished yet. So once this day finishes, if it leaves that open, I fully expect us to come down, institutional order flow, entry drill, and then start aiming for that weekly draw on liquidity, right? So that's what I'm going to be focused on this week. I know I'm going to only be able to trade Asia. I'm only going to be able to trade Asia and potentially Monday, potentially Friday. Just depends on the schedule. I'm in office Tuesday, Wednesday, Thursday as well. So, not going to be able to do anything about that. Okay, so what you want to do this week is you want to wait for one of these weekly or one of these dailies to get traded to, right? So Monday, it's going to be a little trickier. It's already taken out previous day's high. So what is it going to reach for? Maybe the previous day's close, maybe the consequent encroachment of this whole day's wick, maybe the low of the wick, maybe these weekly draws on liquidity as well. So keep in mind on the weekly chart, remember, we are aiming and focusing primarily on these weekly draws on liquidity, right? This here, the midpoint of that wick, the high of that wick, and then on the low side, the volume imbalance and the tail. What we want to see is we want to see price either trade down to one of these discount PD arrays and then form a reversal signal to take us back up to new week opening gap. Same way as we're looking for maybe price to take out this previous day's high or previous week's high and then fall short of this week's consequent encroachment of this wick. And then we want to see it drop from there. I would prefer the short, but we immediately rebalance this whole fair value gap here. So we're going to see. We're going to see how things go there. So back to the daily chart. So we expect an expansion higher, but in order for us to expand higher, we would expect for an initial Judas swing lower first. Okay. So watch for, if you're bullish, look for liquidity on the lower time frames. If there's not something on the daily, you look for the 4-hour chart, right? You try to find where there are areas of imbalance that you potentially could trade down to. You notice here, there's not much here on the 4-hour chart, right? We see wicks that have covered mostly everything that's here. There's no fair value gaps. There's a lot of liquidity waiting down here for us to take. And that liquidity looks very interesting to me. It's not been made jagged like other liquidity has already up here, right? So remember, this past week, we took out each of these relative equal highs. So one thing we haven't seen is we've taken out this short-term low here, but we kind of left relative equal lows down here. So I'm wanting to see, do we have the possibility of us going down, or are we going to remain a bullish factor, trade up above this, and then treat this as a 15-minute inversion fair value gap? So that's what we're looking at this week. On the 15-minute chart, you can see there's the 15-minute imbalance here. And then you'll see a lot of purple rectangles. So on this purple rectangle, actually, I need to get rid of one of these indicators here. Come on. Get rid of this fair value gap one. I don't like it. All right, so on the 15-minute chart, we have, this was the previous few days, right? This sell side imbalance was what we traded up into on NFP Friday. And then we sold off from there, took out the only remaining fair value gap, and then traded up to take out this high. So we are still on the rise here. So I fully expect that we end up continuing to make higher highs and to maybe not come down and take out lower lows yet. But what is suspect here on the 15-minute chart, right? This looks very suspect here, and I'm going to show you why. Okay, so this is the 15-minute chart, right? This is on 10-4. What I see here that could be an easy draw on liquidity is this buy-side imbalance on the 15-minute chart, okay? So I would have that marked on the chart because we haven't, within the first hour, we haven't broken down below this new week opening gap very much. So I'm expecting us to trade up into what? Into this fair value gap here, which is just done. Possibly this volume imbalance up here, and then possibly this bearish order block here, because we had a short-term low, sold off, trading back up. I would like to see if price wants to head down below new week opening gap and tackle this 15-minute buy-side imbalance. I see that as too open. Yes, there's one further down here, but I see this one as the more open liquidity that needs rebalancing, you know, that needs some help and needs to be more equally distributed. Fair value, essentially. So it could rip up higher. It could just keep on ripping higher and just leave this open as a potential like breakaway gap. But I don't know. It looks too suspect for me to think that it's not going to go down to take that this week. So we'll see. Yep. Okay, so let's look at the 1-minute chart now. Let's take a look and see what we've got. So I'm going to pull this chart over. If I can pull this over. Oh, what happened? There we go. Okay, so on the 1-minute chart, we're going to talk and look at, so we're going to look at Asia. For those who are joining in right now, let me know if the music is too loud and you can't hear me. So I'm playing around with some lo-fi music and just trying to see if it works in the background, see if you can even hear it. If you can't hear it, no big deal. But we just went over the weekly draws on liquidity, the weekly, daily, and 4-hour and 15-minute sequence here. So we're going to take a look at Asia. What happened in Asia, right? So here is our opening for the week. Here's our close for the last week. This purple fair value gap where you see price consolidating in deeply, that is Friday's first presentation gap. So if you've been following ICT's content, you'll know what I mean. It's at 9:31 or so, 9:32. It formed. Draw that out over time, and we can see that that first presentation gap is being referred to multiple times, right? And so is the overlay of the new week opening gap high, and especially the new week opening gap low. Notice how we took out relative equal lows here on the way down. So what did we have within the first hour of trading that formed something that we could use, something we might be able to use during the second hour of trading, right? So here we see that we traded down into the consequent encroachment of this new week opening gap first. So that was your first sign. We left some liquidity void open. That's your second sign that we likely are going to drop down and fill those in. Okay. So once we trade up, we see that we've already traded above a minor buy side liquidity here, right? So I'll mark that here. And we have also traded and created more highs until this point where we take out these relative equal highs up here, right? So we spike up above, we get some breakout traders in. Jay Whitway, what's up, man? Good to see ya. How you doing, brother? Doing well? I hope you've been doing well, man. Let me know. So back here we see within, and keep in mind we're framing this within this first opening 6 o'clock to 7 o'clock time frame, right? We're looking at the first hour here. We're looking to see if we can find areas which might be valid swing points. Okay. So we see on this first hour that our low, our initial balance low is down here, right? And let me mark all these out so you have them in show balance low. This is the first hour of trading, and this is what I use oftentimes for my my trades in Asia. I'm going to walk you through this system here. I wasn't here, but this is exactly the same trade that I take every single time. So we have this initial balance high. This is the first hour of trading. Low of the first hour, high of the first hour. This establishes your initial dealing range. Jay Whitway, well, yes, but still finding myself impatient at times. That's okay. If you use low enough leverage, you'll be able to work yourself through that. Through that. Honestly, like oh, dude, coming up on 1 year towards the end of this month. I'm coming up on the 2-year right at the end of this month, man. So it's been a wonderful journey, and I feel so much better. Year 2 is gonna feel amazing. For where you're at right now, Jay Whitway, you're gonna feel amazing at year 2. I guarantee it. Especially if we continue to talk and we continue to discuss. So, and I know you like the short side as well. So this is a beautiful setup right here. So a couple of things. We want to mark before 7 o'clock. You can mark these as minor buy side liquidity. That's what the BSL stands for. You can mark these relative equal high buy side liquidity. And same thing on the sell side. When you see it, you can mark minor sell side as well down here, right? We don't know if it's going to hit this. In fact, because we haven't hit this yet, you could even say that, hey, this is eventually something that we want to see hit because we have so many relative equal lows, right? This could be into New York as well. So if we... Oh, dang it. Why isn't it showing up here? Hold on. Let me go find this on the other 15-minute chart. I want to roll this all the way out to the next day because who knows when it's going to hit. So basically, I've drawn this one, this relative equal lows, out all the way through the rest of the day. And remember, this is that daily imbalance. I think, sorry, 15-minute imbalance, okay? So what do we have? What within the first hour, this is what we've marked out so far, okay? This area here, from this low to this high, is our dealing range. Now, technically, within this first hour, we have our initial balance high, initial balance low. Those are important. I oftentimes will mark those out for the rest of the day. So what I'm going to do is I'm going to draw those out for the rest of the day just to emphasize how important they are. If I could actually get this one here. Let me draw this one out the whole day. Okay, great. Jay Whitway says, great to have you, bro, for real. Bouncing ideas and trading the same concepts with someone more experienced is a gem. Yeah, absolutely. I love getting to see your progress and my own progress as well. It's just good to see traders that are like learning and getting there. So, all right. So the setup here is that you look for a minor buy side or minor sell side to get taken, within the initial balance, you know, high and low. If you don't have any and there's minor sell side liquidity down here, you can mark that, right? When we haven't hit it. So I'm going to mark that as relatively low sell side liquidity. So all of that I'm waiting. And there's an old, so these gray lines here, this is an old new week opening gap. So that purple gap again, this is a first presentation gap. So let me mark that as well. Friday's first presentation gap. If you don't know what I'm talking about, you'll want to watch ICT's 2024 content. This is a really, really interesting tool that I've started to incorporate and backtest. Haven't been able to like really trade New York and the rest of the day to experience the rest of the times it touches, but it is quite powerful. Highly recommend you checking it out. So, okay, so bringing us back to 7 o'clock, right? 1900. So what happens now? We've taken, so this is all we can see at this time, right? So as 7 o'clock comes around, we look to see, does it want to keep trading higher? At first, we create a short-term high. It fails to reach above this short-term high. So as we see price go, we're looking for evidence of shorts, meaning what is a shift in state of delivery? Generally, when we look for a shift in state of delivery, we look for a short-term low that has a big displacement. So now, what do we have here? We have a fair value gap, right? So I would be placing this. It's in a premium, so that's one thing to consider as well, is this is a fair value gap. Sorry, this is a buy-side imbalance that's in a premium. So we want to mark that. We'll mark it out to, let's say, 9 p.m. Okay? So this is all you can see at this time, right? So we're seeing that price reacts off of that, but it wasn't, we're waiting for a short because we see that buy-side liquidity has been taken once. Buy-side liquidity here has been taken twice, and it fails to do it a third time. So we're looking to see, does it have the penchant and willingness to head back down towards new week opening gap high, first presentation gap, right? Let me pull this over here. Or initial balance low. And then what's below it? Liquidity void. This liquidity void where there's absence of price action, one of the most strongest things that I've seen, almost guarantees it will draw towards that. New week opening gap being like the next one there. So what happens when we move forward here, right? We see that we've traded down, and this is a big candle, right? Fairly large candle here. So when we see price instantly balance here, we're looking to see, okay, well, I see that this fair value gap is here. This buy side imbalance was in a premium. We traded below a short-term low. We displaced below it. So now I'm thinking this range is a balanced price range, and we can use this as an inversion fair value gap. Jay Whitway, I feel like Asia accumulation until London. Usually that's the case. Yeah, usually that's the case. And you can trade some really excellent ranges within that. I just don't like trading after 9 o'clock during Asia session. I might as well just wait for 7 a.m., 6 a.m., 7, 8, 9 a.m. New York Open time at that time, because I'd rather protect my own sleep. I've noticed that if I try and stay up super late, I can definitely catch 10 points at a time, but it's a lot less reliable. Okay. So if you're trading Asia like I am, my strict rules are to stay from 6 p.m. till 9 p.m. and maybe 9:30 p.m., 10 o'clock p.m. if you want to stay up that late, right? So here you can see that on the 1 minute chart that we've traded below, we've balanced this price range out. So we're looking for shorts, right? So on the shorts here, what happens? We start to see that a sell side imbalance forms. So what do you have here? You have an inversion fair value gap. You've got a sell side imbalance. All these things are starting to cascade, and you have a shift in state of delivery here, right? Short-term low, displaced. So what I'd like to see is a trade up into this sell side imbalance. You don't have to wait for the inversion fair value gap, but I want to show you something as well, right? So if we were to take this, I'm going to take this. We're just going to measure this out so that you can see how many handles down to the first new week opening gap. That's 25 handles, right? That's a lot of handles. God forbid you end up holding longer to, let's say, the first presentation gap, right? That's already 33 handles. That is plenty for the day. I can make a career off of 33, 43 handles a week. Like, it's very, very possible. So what happens when we take a look at this is I would put my entry here, right? 20.245.50, the low of that sell side imbalance. We would have to go and wait a bit, but price trades up into it there. Trades up into that inversion fair value gap, and you see this immediate rebalance here. This kind of candle is what you want to see when you're bearish and you see this balanced price range. Yes, there are volume imbalances above here, but when you see this kind of reaction, that's typically telltale that we are in for some nice moves here. And so you get, I think, that opportunity, and I think that's it, right? So that's why you want to have a limit order. If you had a limit order here, you had multiple opportunities to get in. But if you had one limit order at the base of this inversion fair value gap, you would have only had one shot to get in. So here you can always pyramid if you want, but I would be entering at the low of this sell side imbalance, knowing I have protection up here as a balanced price range, knowing that I see a shift in state of delivery here. And what else do you see? Yes, these could be considered relative equal highs, but you see a failure swing, which is one of the ones. It's either going to be a bearish breaker where we have a high, low, higher high. You take out stops first. I prefer that. But if you get a failure swing here, you almost never have it come back up here. It's just heavy selling to the downside, right? In this micro time frame. So what do we see here? We see price head down, and let's see how long it takes for it to get down to that new week opening gap. It leaves this gap open too, I think. Oh, nope, it comes back, gives you one more chance to get in. And you maybe have, what, 38, about 5 handles of drawdown there before it continues heading lower. So how long would that have taken you to take first profit at this this area? It would have taken you 40 minutes here, right? So you have to be patient during Asia. But 40 minutes, 25 handles, you're done for the day. Now, let's say you're a little bit greedier. And you're like, hey, I think you could go to the consequent encroachment of this new week opening gap. So let's draw that out as well, because it's a sizable gap, right? So let's find the midpoint of it. And let's put the consequent encroachment of that new week opening gap in here too. I want to do this because you have the visual here. Okay? So we're going to make this 1. We're going to make it dashed. And boom. Now you can see the consequent encroachment there at the 50% line. So that, when you see this many confluences where you have initial balance low, sell side liquidity, right? Coupled with a liquidity void, coupled with a consequent encroachment of a gap, new week opening gap specifically, and a first presentation gap, you know it's going to draw towards down there. You know, when you see that many confluences, you know it's going to draw down there. So what happens now, right? Let's see how long it takes for you to get down to that consequent encroachment. If you had a limit order set here, you might not have gotten filled there, but it wouldn't have been much longer for you to get filled beyond here, right? So 45 minutes for another 10 handles on top of that, right? God forbid you went for the holy grail and went all the way down into the liquidity void, right? Look at what it does there. It goes down into this liquidity void, right? Specifically, that portion, that remaining portion there. So, pretty interesting, right? What would that have netted you? Had you held from here all the way down to, let's say the low of that liquidity void, right? You would have hit it right here, actually. That would have given you 42 handles, right? And new week opening gap low. Yes, we do have new week opening gaps beneath us as well. Old ones, those gray levels. But remember, we've taken out this initial balance low. So we're starting to see that price isn't willing to go further below that. So this is one of the favorite models that I use now as a working 9 to 5. If I'm able to get on at 6 p.m., I watch the first 30 minutes and the first 60 minutes. And I try to see where is liquidity forming, because if it hasn't, and if it's let go the new week opening gap, there is a very high chance that it's going to go back to that new week opening gap. So I really like Monday opens, and this is what I look for on Monday opens. If it goes the opposite way, it's the same deal. Now, sometimes you'll have it where it goes up, takes that out, comes down, takes out this sell side, and maybe it creates relative equal highs and leaves that for later. So right now, we're actually shifting up towards those relative equal highs right now because we had taken sell side liquidity out. So as we proceed forward, we start to see accumulation here, right? Look at where it's accumulating with that first presentation gap, that purple box there. It's pretty amazing to me. So you see this, once you see it come back above the new week opening gap, you can use this volume imbalance as a fair value gap, and this buy side imbalance as well. This would be a fair value gap, actually. It comes down, enters here, and you can ride that up to relative equal highs at 2064. So let's see what that projection would be if you had entered at the volume imbalance. Let's say you entered at the high of this fair value gap, so you would have gotten triggered here. Let's see what that would be. That would be about 38 handles if you were looking for a long, right? So on the opposite direction, you see price take out a sell side liquidity here, initial balance low. That got taken out. You see displacement to the upside, taking out a short-term high. This buy side imbalance, you can take long. And then you can head up higher. Let's say you didn't trust that one because it's still within the new week opening gap. You can see that there's displacement above new week opening gap. It could retrace to the new week opening gap. It oftentimes does. But you see this volume imbalance here, and you see this fair value gap. So you might as well try to take that long at that point in time. Perfect entry. And what does that give you? Price is moving upwards, moving upwards. It hasn't taken that out just yet, but it will. And it's going to take not only that out, but it will also end up taking, where did we start from? We started here. It will take this out as well. So choose your poison, right? You can take, I just like, whether you like to trade short or you like to trade long, you can find these setups every single Asia session. Like every single one, it's there. Every single London session, it's there. Every single New York session, it's there. Every single London close session, it's there. You just have to look at the session, right? So we should see this spike up and take out this buy side liquidity soon. Now, keep in mind it is 9:40 p.m. So I personally, it could stop right here, right? Look at where it's stopping. Look at that relative equal high up there. So it could drop here, come down, take out some more liquidity, and then head higher too. But I do believe this will be taken out at some point, right? So, yeah, I think that's really all for today. I mean, this is a solid move, and this is if you missed the first move, right? If you missed this first buy side imbalance, shift in state of delivery. So, keeping this within the first few hours of the night, I personally prefer looking for these types of setups, and they repeat every single day. Sometimes maybe not during some Asia sessions, but during Mondays on a week of CPI, absolutely. So you're seeing this real time. I'm expecting it to reach at least 2264.50, and when it hits that, it should spike through this initial balance high. we'll call it IBH for shorts, and IBL, initial balance low. Yeah, so I do expect it to take that out. If you're not long already, do not take this trade. You're not going to get very many points out of it, and it could immediately reject as well. So, yeah, that's really it. I mean, that's all I've got for you today. There's 2 models for Asia. If you have to trade Asia, meaning if you've got the 9-to-5 job and you can't trade it, ICT helped me learn and kind of craft this model, and it's taken a lot of back testing. Do not try to trade these if you haven't back tested enough, right? Like, you need to go prove to yourself that, hey, this model works, and I've seen it multiple times, right? You just know once you've looked at hundreds, thousands of examples, just go back as far as your data takes you and look for examples of this, because you'll see it when it happens. You'll see when it doesn't happen. There's only 3 things that can happen during Asia. It can instantly go up above new week opening gap high and hold there a little bit, leaving a little bit more to get taken. It can create highs, come back down, create lows, go all the way through the new week opening gap high, and then come back for that liquidity up here. Or it could go below the new week opening gap low and just kind of just sit there until it's time to come back up to the new week opening gap. There are some variants where you have like wicks down in the middle and consequent encroachment as well, but you don't need, those are more rare. I mean, and they leave very obvious clues here. And let me mark this as IBL sell side liquidity, because it's easier to recognize sell side liquidity here, right? That line, right? So yeah, that's essentially a market maker sell model. Finishes there, accumulates, and then you finish this market maker buy model. It should finish in a little bit. I don't know if I want to wait around for that, but yeah, there's 2 models here that you can use, and you can choose. There's so many entries here, right? This was a fair value gap up here. This was the buy side imbalance that we looked at earlier, right? You could have taken that as an entry. You could have taken this volume imbalance as an entry. Right here. As long as it's traded up and displaced above a short-term high and displaced above your new week opening gap, then you can certainly take that, right? So, those were your long openings. I prefer confirmation, but even this would have been fine. I think it would have been a little bit higher risk because it could certainly just come back down and keep bouncing in new week opening gap. But look at the time in which it did that, right? 21 o'clock. So right immediately, right at 9 o'clock. So at the top of the hour, we got a nice move, and we are seeing that it wants to, at least had taken out this relative equal high. It's kind of holding a little bit here, but I do think it'll eventually take that out. Or leave this as relative equal highs and not take that out. Either would be okay, because you would have taken profit at this juncture here if you had added on further here and hit that mitigation block there. So, yeah, I think that's really it for tonight. Any questions from the audience? Any questions, comments? Let me know. But that's my model now. That's what I look for during Asia session. So, yeah, that's it though. Let me see if we even have anyone left here. 9:46. We have 3 people on. Okay. 2 people on, 3 people on. Cool. So yeah, wait for liquidity to get taken. Overall, bias is bullish still. So keep that in mind as we go forward this week. be careful. Reminder, be careful. It is you're gonna have a lot of FOMC members speaking, like we mentioned earlier. So you want to be careful about these days. It's gonna be much more difficult. So Jay Whitway, thanks for showing up. Have a good night, bro. Yeah, you have a great night too, Jay Whitway. I'm gonna close down now. Wife is texting me as well, so thanks a lot for joining in. I hope this is helpful. Good luck trading this week. Trade safe, and I will catch up with you guys later on this. I promise I do an update, right? So, okay, so my accounts are getting better in holdings right now, but there's 5 accounts that are in somewhat drawdown. 5 accounts that are in very positive. Let me take a look here. So one account is down. Let's be $600, $700 from drawdown. So it's risen from $300 from drawdown. That's one account there. Another account is the same, 700, 800 down from drawdown. So those are the heavy drawdown accounts that I'm clawing my way out of with one micro contract. There is a third account here, which is $1,000 away from drawdown. So very proud of that one. That's the 50K. The 150K is about 900 away from drawdown. So clawing that one back up as well. And then we have the 250K, which is 2,200 away from drawdown. So a lot more room on that one. I'm going to start to size up to 2 micros on that one. And then the 300Ks, I've had a really nice run here. I use 6 contracts on those because that's 2% risk. And that allows me to get that one. One's up $6,300. So really close to payout on that one. Actually, no. There was one day that I had like $3,000. So I need to get to around $10,000 before I can request because of the 30% consistency rule. Another is at $4,000. Another is at, and then the other 3 are at positive $1,600. So there's a lot sitting there, but slowly and surely, as you can kind of tell, I've refocused my game to focusing on 2% risk and getting base hits for weeks on end. Because once you get above that trailing drawdown, if you're able to generate, let's say I have only used 5 of these accounts that are in good standing, right? If I can generate $500 from that, which is very, very possible, even working full time, $500 across 5 accounts, that's $2,500 per week, right? $5,000 per 2 weeks, $10,000 per month. They're very doable, right? Even half of that, even if I only made $250 per account, that's absolutely doable once you get there, right? Using micros even. So once you get past that drawdown, you can just keep on making consistent money, and it's going to be like clockwork at that point. But you need to stay alive long enough to be able to get there, right? So micros will save you. Your risk profile will go down. Your overall consistency. Oh, wow. Look at what happened. We failed there again. So we took out this minor buy side. We failed, and we headed down to the first presentation gap and the consequent encroachment of the new week opening gap here, right? Yep. Jay Whitway climbing that ladder. Bravo. Thank you. Appreciate that. Yeah. Once I started doing that, once I switched down to 2%. So when we say 2% risk, I don't say 2% of 300,000 because that's the account size, right? Leverage that I get. I say 2% of the trailing drawdown. So if you have like a 25K account, that's 2% of the $1,500. 50K account, that's 2% of $2,500. That means you can only risk 1 micro. The thing is, if you can trade 1 micro, then you can trade. You'll find out over time, if you can learn how to trade 1 micro and look for the 20, 30 point handles, you will succeed in trading everything else. There's no question about it. If you can learn how to trade using micros, you're your performance accounts are going to stay much longer if you can stay disciplined with risk management and know when a day is just not going your way, just sit out, wait for the next day where you can find a better setup, right? So yeah, that was a wonderful little removal to take out all other liquidity here. So yeah, it looks like it is consolidating, and it just got a lot of longs unseated there. So that's going to be very interesting to see. Does it go down to take out these relative equal lows down here and come down to that 15-minute buy side imbalance? So we will see. But yeah, outside of that, yeah, I want to get to the point where I'm generating about $500 per account across 5 accounts. And then once I get the other accounts out of drawdown and I get them to the profit goals as well, of course, 10 accounts. I would love to get $500 across 10 accounts. That would be my dream. 500 be $5,000 per week times 4 weeks, $20,000 per month times 12 months, $240,000 there. So that would be really cool. Actually, no, I did that math wrong. So $500 a day times 10 accounts. So each week, I think it's possible to pull that. Now, yeah, I mean, let's see. Let's see first, right? Like even if I get that per week, that's still, that's still a solid amount of money, right? So let's say I do 5,000 per day times 5 days times 4 weeks times 12 months. Yep, that's all you would need to do. You need to look for 10 accounts and $500 each. Now, it gets real quick once you have all your performance accounts above your trailing drawdown, and they're all in good standing. So you want to go for multiples there, because you then are able to leverage far less risk, and you're still able to hit those base points, right? So your goal should be to quickly pass the eval. You don't have to quickly pass the evals either, but it's beneficial if you know how to trade and you learn how to trade and you know what setups to look for. Maybe use a quarter of the total leverage you can use and pass the evaluations a little bit more riskier, a little bit faster, so that you can focus on really good training, good discipline for your main accounts, for your main performance accounts. Okay, so that's so important. I can't tell you, when I made that switch, my whole trading game has, in the past month or two, maybe like 2 or 3 months. Well, I could say the whole year really, but even the last 2 or 3 months is when I had that shift. I don't know how to explain it. Every trader gets there eventually, but when you put enough time backtesting, you'll get it. You'll see what your model is. You'll focus and train your eye on that model, and that will be it, right? So I think that I would recommend everybody who's trading Apex Trader Funding, right? So anyone who I know is trading Apex Trader Funding, it is well worth your while to go and so if you don't know what I'm talking about, if you're on my YouTube channel, obviously Apex Trader Funding is here. The code is Johnny, Jonny, if you want to try, but I would not recommend going here and buying an evaluation if you're new. Go find like TradingView and just back test using free TradingView for the time being, right? It does look like there's a sale for 80% off, but use the trailing drawdowns that you see here. Whatever account you get, use the trailing drawdown as your threshold if you are trading a performance account. It will help you stay in the game. It will help you eliminate tilt or survive long enough so that you're beyond tilt, and stay disciplined to 2 or 3 trades a day. I mean, look for those 2 or 3 trades a day. You'll be much better off if you do that. Yes, can you go degen mode and like rack these up? Yes, but you're gonna trigger Apex looking at you as well when you do that. So if you're consistently using 5 minis, fine. I know friends that cycle through accounts like this. They use 5 minis. They use like 15 minis. They blow up these 300K accounts, and they do well. And then they withdraw everything, and then they start them over again. So they're in a different level, though. I don't want to do that. I'd rather do it slowly, consistently, catch all of my accounts back into good standing, and then just keep parlaying it up from there. So, okay, cool. So that is it for today. So, I'm going to close out. So thank you very much for joining in, everybody. And it's my pleasure to get to stream here. I love being here. If you end up using that model, kudos to ICT, Michael Huddleston himself, for teaching me that, and his son as well. He taught it before. He taught all this before, but it seemed clearer just hearing it one more time in the 2024. So 2024 ICT is very powerful. Definitely would recommend you studying that a little bit, but if you have your model, it works. No big deal, right? All right, thank you, everybody. Jay Whitway, have a good evening, brother. And yeah, we'll talk soon, everyone. Trade safe, get some rest, stay hydrated, and we'll talk soon. Peace.